purpose of this video is to provide feedback on the answering of question 1 of Year Test 1 from the markers' perspectives. Hopefully, you find this video useful for purposes of understanding your own solutions and for answering future FRK 201 test papers. Please refer to the previous video for an explanation of the suggested solution to question 1. The markers identified the following strengths in students' attempts. Students following a structured approach scored better. There was a good display of the knowledge of the format of the SFP. Cross-referenced work was easier to mark. Neat work was easier to mark. And some students did attempt the suggested work method. The markers identified the following general weaknesses in students' attempts. No or limited cross-referencing to calculations. Students made use of assumed amounts instead of attempting a calculation. Assumed amounts were not marked. Calculated amounts were not used to answer the required. Cash flow statement knowledge was generally lacking. And students didn't follow the suggested work method per the note in the required, which specifically stated, consider starting your calculation with the given amounts and adjust where and if necessary. The following common errors were made in the answering of Part A of Question 1 of Year Test 1. Students didn't realize that they had to start with cash generated from operations from the cash flow statement and reconstruct the given information. Students attempted to calculate profit for the year without having revenue or cost of sales amounts. Excluding the working capital changes from cash generated from operations gives you revenue and cost of sales. Then you could add the other profit or loss items to calculate profit for the year. With regards to the movement in inventories, students didn't consider the write-down to NRV. Many students took the future sales of the following year as revenue for this year. The future sales value was indicative of the NRV of the inventories at the end of the current reporting period. None of these sales realized during the current reporting period yet. The movement in working capital changes had to be added back in the opposite direction to get to the revenue and cost of sales amounts. Usually you work from profit for the year to cash generated from operations. Now you're working from cash generated from operations to profit of the year. So the direction of your movement in your working capital changes should now be in the opposite direction. When calculating profit on the sale of the asset, some students included the 150,000 Rand proceeds received in your bank account as other income in the profit or loss calculation. Profit on sale is calculated as the difference between the carrying amount of the asset on date of sale and the proceeds received. The depreciation calculations were generally well attempted, but there's still a lot of errors made in calculating the depreciation months applicable to the current reporting period. Please make use of timelines to ensure that these easy marks are not lost. For finance cost, a lot of students only included the 36,000 Rand cash flow interest paid in the profit for the year calculation. Remember, we account for transactions based on the accrual basis of accounting and not the cash basis of accounting. In the cash flow statement, the cash flow interest paid was given as the 36,000 Rand. You had to calculate the accrued interest for the reporting period, taking into account the repayment of a portion of the capital outstanding during the current year. The original outstanding capital was 300,000 for 9 months of the year. Then there was a repayment resulting in an outstanding capital balance of 215,000. Interest on that outstanding capital balance had to be calculated for 3 months of the year. Those two amounts added together gave you the interest accrued for the year of 33,450. When calculating the income tax expense, a lot of students only included the 268,440 cash flow taxation paid in the profit for the year calculation. Remember, again, we account for transactions based on the accrual basis of accounting and not the cash basis of accounting. In the cash flow statement, the cash flow taxation paid was given as 268,440 Rand. You had to calculate the accrued taxation expense for the reporting period, taking into account the opening and closing balances on the taxation payable account that was given in the question. The following common errors were made in the answering of Part B of Question 1 of Year Test 1. Very few students attempted the suggested work method of starting with the given opening balance on the equity items as incorrectly calculated by the client. Together with that, students didn't recognize the errors made by the client. Remember, the best way to test your understanding of a topic is to confront you with errors made in the application thereof. Only when you are able to identify the errors and are able to suggest how to correct them have you truly mastered the topic. Students that use the analysis of equity still manage to earn quite a lot of marks, as long as the basic principles were adhered to. But a lot of basic principle errors were still made in the analysis. For example, including the parent's dividend in the analysis. Remember, everything in the total column has to represent movements in the equity of the subsidiary only. If you remember correctly, there was a net gain from bargain purchase in this question. By not using this net gain from bargain purchase when calculating retained earnings, you lost quite a lot of marks. A pointer for consolidation questions. Whenever you have to calculate consolidated retained earnings, always check for a net gain from bargain purchase. And if you have one, remember to include it in that retained earnings opening balance. Another common error was forgetting the principles of Chapter 8. When calculating profit attributable to the owners of the parent and NCI, a lot of students correctly excluded the preference dividend when calculating profit attributable to the ordinary shares. But then they forgot to also attribute that preference dividend to the preference shareholders in the preference share analysis. And then a final comment on errors made on the analysis. All these amounts that you calculate on the analysis have to be used in the line items in the statement of financial position, which was the required of this question. If amounts were not used, a lot of marks were lost and students were penalized in that regard. A final takeaway from this video, some exam technique pointers. Apply the following when attempting an FRK 201 question in future. Always start by answering the required. In this question, it was an extract from the SFP. That's the first thing you have to put down on your answer book. Then you go to your calculations, and as you answer the calculations, you start filling in those numbers in the required SFP. Know your formats. It's easy marks to earn. Cross-reference all amounts to calculations. Use those calculations to answer what was required to avoid being penalized. Consider suggestions by the question setters on how to attempt the question. And finally, focus on the easy marks. Don't allow yourself to get stuck.